Hello again, and welcome back to another episode of the Bearded Banker podcast. This is episode 13 already. This one's going to be a little bit different than what we've been doing. No guests today. We're getting close to the holiday season, and people are very busy with their schedules, as am I. I'm actually doing this kind of last minute on a Sunday, quickly just because of how crazy it's been already with holiday parties and family parties and business in general, and all good things. But because we want to be very selective with who we have on and the conversations that we're going to have, I want to make sure that we're not forcing anything. So I just wanted to use this time on this episode 13, lucky number 13, that we're doing here today to kind of recap what's been going on with the podcast. We'll talk about the market a little bit and just some other miscellaneous things that may or may not come up. Should be a quick episode. We'll see how it goes. And I hope it provides some value to you guys just as an overall review so far. So if you've been keeping up with the podcast on these last couple of episodes, we've had some really great conversations. I enjoy having people on and learning about their story. And it's funny because a lot of the people, if you've noticed, that have come on are personal friends, either best friends, I grew up with, or people in the industry, or people I've worked with. And I really learned a lot about their stories. Like, it's crazy how well you can think you know somebody, and until you sit down with them and ask the kind of questions that I've been asking, you don't really know. So that's been truly eye-opening. I do want to get, the audience's feedback on the length of the podcast. I've gotten some mixed reviews on timing. Some people were like, you can keep going, go a little longer, just kind of riff and let it go. And then some people are like, that 45-minute, under an hour is kind of a sweet spot. So what do you guys think? Let me know. I'm of the opinion that when we're just riffing and going and jamming and the conversation is flowing, just to kind of keep it going. And if some of them are a half hour, 45 minutes, that's cool. And if some of them are almost 2 hours, that's cool as well. It really just depends on the content and the mood of the conversation and how it's really flowing. So let me know what you think about that. But yeah, just talking about some of the guests, that we've had on, starting with Heather in real estate. We had two real estate people. We had Heather Corrigan, we had Joey Aziz, both platinum producers, and they have their own styles. Go back and listen to those episodes so you can get a feel for that if you haven't already. Really dropped a lot of good information as far as marketing, as far as dealing with clients, as far as teams and kind of building. And now that I think about it, I'm pretty sure they both mentioned that they don't really have a team. They kind of do things themselves. Or they have people that handle some maybe admin tasks. But when you go to work with an agent and you're expecting a platinum level producer, you want to deal with that agent, right? And that's what they give you by working with them directly. We had my bro, Josh Macias on, regional vice president, handling investments, life insurance, things of that nature. That episode was really good. I actually had a few people reach out to me on the mortgage side that said, hey, I want to get that license so I can offer that service to my clients as well, which is what I've been doing for a while. So if you are looking for life insurance or help with your investments, definitely reach out to us, because especially if you're in the home buying process, once you get that mortgage, and especially if you have a family, children, you want to make sure that they're always well taken care of. So, it's not a requirement, but afterwards, having the free consultation to go over life insurance and things of that nature, investments, retirement, is always a good conversation to have. And doing it while you're younger and getting a term policy and setting up retirement funds or college funds for the kids is always a great idea. So that episode did really well. And all of them really were great. We had Eddie on, my barber. I had a lot of people reach out about that and his story and understanding the dealing with clients and pricing and respecting people's time. Huge episode there, and really aligned with a lot of people that are in my network. And even us with, we have my wife's cleaning company, Tia's Housekeeping, and we've been making a lot of changes and strategizing on that because it's been open for 3 years. We're going on our 4th year, and it's been great. It's been great for the clients and the customers. It's been great for the employees and the cleaners, but the business hasn't really taken off the way it should be, the way I know it can. So we've made some changes, and if you are in the market for a cleaning service, definitely reach out to us and see what we can do, because what we do is a little bit different. There's different types of companies out there. There's companies that do what we call surface cleaning, right? So your Molly maids or anything like that, and it's not knocking them. They provide a great service, but they come in, they wipe stuff down, they're in and out, and they leave. It might be one woman that comes and takes care of it, and then that's it. And then you have your kind of mom and pop, we'll call them, home cleaners, which are ladies that kind of do it on the side. You pay them cash, maybe not even the side. It's probably their full-time job. But they're just like, hey, give me $100 and I'll clean your whole house. I'll do your dishes and I'll cook you a meal. And that's great too. But again, they're not professional cleaners. They're not really deep cleaning. And, they're not as reliable with all the bells and whistles as a company, because they just don't have the organization, right? The back end support and services. And then you have other companies that, deep clean, and deep cleanings typically take longer because you're deep cleaning, you're moving things, you're getting behind things, you're dusting and mopping and, doing all the things, right? So that takes a little bit longer. What we've figured out is where we can service is deep cleanings at surface cleaning speeds, right? So we send a team of 3 to 4 ladies, and they go in there and bang it out quickly, but still with quality. And there is a little bit of a premium for that as far as price, because we're sending 4 people, 5 with a driver who drives them around to each appointment, and it helps with efficiency and helps them, keep each other in check. So doing it that way has allowed us to make sure that the cleanings are quality, right? Deep cleanings, but also it's as little intrusion on your schedule as possible, because we're sending a few people and they're banging it out in, half the time or a quarter of the time that would take one lady all day in your house to clean. So that's kind of where we're at with that, and that's been great. And we've already seen increases in revenue and profit specifically over the last couple of months. So yeah, that episode with Eddie did really well. We had the People's Herbalist on, my brother Danny. Got a lot of good feedback on that with just holistic health. We had Bill and Bua on as far as marketing and talking about influencer marketing and things of that nature. And then last week, Rob Maines of Rebel Victory Media, my buddy, videographer, photographer, content extraordinaire. And that was our longest episode, and it did really well. So, just a little update on what you've seen so far and how I'm feeling about it. I feel good. The podcast is getting a lot of love. It's getting a lot of good feedback, and I definitely want to keep going. And I'm not going to force guests. So I want to be selective. And when I have people come on, it's going to be worth it. And if not, it's going to be like this, and we'll kind of chop it up with what's been going on so far and go over the standard mortgage money mindset stuff that we usually do. So that being said, let's talk a little mortgage. Let's talk a little market and updates over the last couple of weeks. Now, if you've been anywhere in the news or on social media, you've probably seen people talking about rates dropping. And it's true. They have started to come down because the economy seems to be strong and on solid footing. Even though prices for things are still high, inflation is still high, the job market is still solid. And the Fed has indicated that they do not plan to raise rates again. So what happens is when the Fed makes a comment, any comment like that, among other things, the market starts to react based on what they expect and what they forecast for the future. So because the Fed is saying that they plan to hold rates, and because the news has come out that they plan to drop rates next year at least 3 times, the rates are going to start coming down to kind of fit into that process. Now, rates come down a lot slower than they go up, right? When they go up quickly. It feels like overnight. That's what happened to us over the last year and a half. Rates going from 3% to 4% to 8% in what feels like a flash. It's going to take a little bit longer for them to come down, but they will come down. So we're discussing with people what that means for strategy, right? So if you're in the home buying market, or you plan to be in the next 6 months to a year, what do you do? And our advice is to take advantage, if you can afford it, and this is what it's been for the last year, take advantage of the market as it is now, with the rates that are a little bit higher, because the prices are going to be a little bit lower. That's just the nature of supply and demand, right? So when rates come down, everyone's going to get excited. They're going to say, oh, okay, finally things are going to be affordable. Let me get pre-approved and let me start shopping for a home. And when everyone does that, and there's only so many homes to buy, the demand is going to increase prices. Now, are there going to be more homes? Hopefully, because people that are on the sideline now that are like, you know what, I want to sell, or I need to get more space, or I need to downsize as far as my living conditions. However, I don't want to lose this 3% or sub 3% rate to go get a new mortgage at 4, 5, 6%. The only people that are really doing that are the people that are selling, that have a ton of equity in their current home, $200,000, $300,000, $400,000 in equity, and they're taking all that equity and maybe downsizing or going to a different state. We're in North Jersey, so things are more expensive here. Things are more crammed here as far as space, and might be going to a place that's cheaper with more land, with more space for them or the family, or just more comfort as far as the overall expenses. So those people that have equity, they may be selling because they're going to use that equity, $300,000, $400,000, to put down on the next house, and their mortgage being at 7, 8% isn't as big of a factor because they're going to cut their mortgage down significantly and have a $200,000 mortgage or something like that. So those people are still selling, but we think as an industry that once these rates start coming down, more sellers are going to be like, okay, now I can actually make the move I wanted to make. So more houses should come on the market, but the demand is likely still going to outweigh the supply, just because there's been a shortage in inventory, or shortage in supply of housing for so long. So we'll see what happens there. Rates are supposed to come down, which is great news. We are urging people to take the par rates now, market rates, or maybe buy down their rate with points a little bit, not anything too drastic. So what I mean by that is if the rate is 8% now, 7.5% now, right? And we're actually seeing rates get into the 6s, but let's just say worst case scenario, right? You're in the 7s. It doesn't really make sense to pay $8,000, $9,000, $10,000, right, to get a 6.25% rate, because when rates drop in 6 months, 12 months, 18 months, you'll be able to get, maybe a 6% somewhere in the 5s with no points when you refinance, and just use that money that you would pay in points now towards the refinance at that time. Now, if you're looking at a property, or you're trying to get pre-approved for something and you have to be at a certain rate that you have to buy down to qualify, you have to do what you have to do, right? And there still are temporary buy downs, and that's still an option. We've done a few of them. They're very unique and require specific scenarios, usually with sellers' concessions and a good negotiation for that. But they're definitely doable. But in the meantime, start getting pre-approved, work on the numbers now. You'll get a better deal on a house overall. And then when rates come down, 6 months, 12 months, we could do a refinance and make sure we get you that lower rate, which drops down your payment. Maybe you get rid of some PMI or something like that. If you're buying with a lower down payment program, 3%, 5%, 10% down, then it could be a great move. So I say that to say, it's great news that rates are coming down, and we can't wait. And there will be a little bit of a refinance boom, not like it was in 2020, 2021, right? Because a lot of people took advantage. But at least if you're in the industry, or if you're a buyer that closed within the last 12 months, you are definitely going to be primed for refinance. So a lot of times, I was doing over 100 deals a year during the pandemic, 2020 to 2022, let's say. And now this year might have been half, but all those people are going to be eligible for refinances soon. So what does that mean? That means that if I've done your deal, definitely keep an eye on your rate and reach out as soon as you see some movement, so we can, discuss, and we'll be keeping track of it too. And you'll probably hear from myself or Kathleen on my team at that point. So all those people are going to be primed for a refinance. And then when the rates come down, more people are going to jump in the market. So I'm expecting another year close or similar to how it was during the pandemic, because it's basically going to take all that refinance business and then plus the new purchase business that comes in, and we should have a good year. What happens after that, we have to see, right? Things still have to level out. We have to see what happens with inflation and the strength of the economy and jobs and things of that nature. So it's definitely going to be interesting to see where things go. But we do think next year is going to be a good year. We're still pumping our hybrid agent program. So if you are a top producing real estate agent anywhere in the country, and if you've ever considered getting paid on the mortgage side of the business, we have a program built for you, completely legal, completely compliant. You become an employee of our company, a loan officer with our company. You'll be on my team, and we will help you get your clients' mortgage services through you as the loan officer with the support of a veteran team. I've been doing this over a decade. Our bank has been around for 100 years plus, and our executive team has been in the business, decades. So you get all that service, in-house underwriting, in-house processing for your clients, where you are really a one-stop shop and you can be compensated for that. So if you're interested in that, definitely reach out. We've seen our team grow in doing it. It is very selective. I'm not just bringing anybody on board. It is another expertise. It's another skill set you have to develop. So it's not just like, okay, here are my clients, here you go, run with them and do the work. No, you really have to be involved, but you have the support of us and the team. And your clients are coming to you because they trust you and your suggestions and your opinion. And with the market the way it is, and with the industry the way it is, and even these lawsuits that are going on with NAR and trying to get rid of buyer's agents and things of that nature, we'll see what happens there. I'm not well versed enough to have too deep of a conversation there, but I will be. We've looked into it and kind of seen what happens. And what I do know is the industry always finds a way, right? So if there is some change as far as agents and compensation, there'll be some way that people make sure that they're getting paid, right? But this is another tool. This is another way to supplement some income, especially during a refi market. As a realtor, you could take advantage for all the clients that you've helped find homes and just say, hey, I've partnered up with this team over at this company, Brighton Bank, and we can help you with your refinance and financing needs, your purchase mortgage needs. Just fill out this link. It'll be a soft credit pull pre-approval, and my team will take it from there and kind of review and see what we can do. And I'll be here along the way to help you as well. So we do it as a team, and everybody, for the better of the client, can step in and do their part and give you kind of a one-stop shop feel, which is what's happening. The market is going there. Zillow is, promoting their own lending services and making it expensive and competitive for agents to market on there, and other sites like realtor.com, etc. So that's where the market's going. That's the service that we offer. It's not for everybody, but it is for a select few, and the ones that we've seen come on board are doing really great with it, and it helps us as well with making sure that the pipeline is full and everybody getting a little piece for doing their part and helping the clients overall, right? That's what we want to do. We want to help more people get into homes and get into real estate. So that's still a great program. Other than that, the podcast itself, like I said, great reviews. I'm happy that I started it. I'm happy to continue doing it. I'm happy with the people that we have scheduled to come on probably early next year. So the next couple weeks are going to be me talking about the market, talking about what's going on, preparing for next year. And then we'll kind of hit the ground running with some guests at the top of next year. But it's been going great. I am looking into, now that I'm in it, it's like, all right, I want to see things grow. I want to see things change. I want to get, some introduction media, some assets, some music, some commercials, some sponsors, maybe find a location where we could do this in person with people in a cool kind of setup which I've reached out to some studios and things like that. So you'll see all that coming. Definitely something I want to do. Posting has been great. The algorithm's been a little messed up on Instagram. I don't know what you guys think, but I feel like stories aren't getting views, posts aren't getting the reach they used to get. And I know social media, it ebbs and flows, and with all these different platforms and TikTok and Facebook and YouTube Shorts and just the short form content in general. There's a lot of competition. There's a lot of noise. So cutting through it is hard. But for the people that have been keeping up and have been watching and listening, I really appreciate it. I'll bump into people that I don't expect to listen or be listeners, and they'll give me some feedback on all the episodes they've listened to. And, it's very, very much appreciated. It is another job for me. I do it on the weekends and then have to edit and get everything going. So it is a lot of work, probably more than I expected, but we're not afraid of a little bit of work. That's for sure. So we'll put it in. And, the goal is always to stay consistent, right? To make sure that we're doing and what we said we're going to do, and keeping our word and our commitments, and moving forward. So I'm excited to see where it goes. Like I said, a lot of people that want to jump on that have reached out, which has been, I'm very grateful for and humbled that they reached out to me. And then there's some people that I definitely want to reach out to and get on and get their take on, the things we discuss, business and mindset. And it's going more towards the mindset stuff the more people I talk to. And there's so much overlap. Even though all these people are in different industries, the stories are very similar, and we have a lot of the same overlap as far as advice and how to run a successful business, and the mindset you need, the books you need to read, the people you need to network with, right? So it's been really eye-opening. It's been great for me. So I really do appreciate it. And I look forward to the continued success and bringing people on with guests and things like that. So yeah, we're really excited and looking forward to next year. The end of the year should finish strong. I do see an uptick in activity in the real estate market, in loan submissions on my end and for my team. And I think that's a good sign going into the winter months up here in the Northeast, where it usually slows down a little bit, as well as with the rates coming down now. It's good timing to kind of keep that business consistent. And hopefully next year, which we're expecting, will be a great year to pick up some real estate. In my podcast with Joey Aziz, we were talking about, keeping a pre-approval ready at all times. And I do encourage you, even if you're not looking, if you're someone that's considering purchasing real estate at any time in the future, or you're someone that wants to buy your primary residence, wants to build a portfolio of real estate, you should always have a pre-approval kind of ready to go, or at least know where you stand. And like I said in that podcast, I always have something ready for Laura and I to know kind of where we're at pre-approval wise, so that if something pops up, we can jump on it. And we've actually been looking back into the multifamily market and saying, okay, maybe we can jump back in as far as multifamily and being landlords. And in that search, we came across a single family that we loved, that we put an offer on. So we'll see what happens there. And then, looking for these multifamilies. So just having that pre-approval always ready, December and January in our area is a great time to purchase for a couple reasons. One, it's the winter, so there's less competition. There's less people out because of the cold and the weather to see houses. So you can get a better deal on a house in most cases. Two, the people that are listing in the winter, the sellers, if they are listing, they probably have to sell for one reason or another, because if they didn't, they would wait for the spring or the summer to get the best bang for their buck, the best price they can get when there's more competition, right? But if it's listed in the winter, it's something that they need to sell, either because it's a flip and they're investors and they need to get out as soon as possible, or they're relocating, or whatever the case is. So that's a good time to pick a property. And then the weather actually helps as a buyer, because when it's rainy and wet and snowy, you could see how the house handles the moisture and handles that weather, right? You could see if there's leaks, you could see if there's water damage, you can see where the rainwater or the snow accumulates. You could just have a better feel for that property, because a lot of times when you're seeing something in the summer, it's a beautiful day out, things are hidden, by the sunshine, and you don't really get to see if there's anything wrong. I mean, you'll get an inspection done and things like that, but it's really good to see homes in the winter, get the best price, and negotiate with a seller that you know needs to sell. Right. So these are the times. The last house we bought was in, probably September, October. When we were flipping houses, we always look to pick them up in, December, January, February, March, kind of that first quarter, end of fourth quarter, first quarter of the next year for those reasons. So just a little tidbit there. But yeah, so I don't want to keep this too long. Just want to give you a little update on what's been going on and some feedback on the podcast. Again, I love you all for listening. Thank you so much. And we're going to keep moving along and keep having great people on and great stories and great insights and suggestions for you as just a person looking to grow, for you as a business person looking to grow, a salesperson, an investor, wherever your mindset is, and just handling, personal finance and things of that nature, or just being inspired. A lot of these people have very inspiring stories. So we'll continue to grow and push and, and take it from there. It's going to be a crazy next couple of weeks because of the holidays. So happy holidays to everyone. And we will see you next week. I'm going to continue doing them. I might take a break around the holidays. We might put the podcast under some type of construction with everything I mentioned earlier, because now that I'm in it and I was like, you know what, let me just start getting some episodes out. Now it's like, okay, I want to make sure that we have, some sponsors. I want to make sure it sounds good, looks good. I want to make sure that we have the intro music and spice it up a little bit for you guys so that it's entertaining, right? And again, sponsorships, some music, some intros, some outros, a good studio, things like that. We're looking into all of it, and I look forward to doing it in the new year. But for the meantime, again, thanks for listening. We're going to end as we always do. The goal in life is to be mortgage free, control your emotions, have integrity. If you want to use my likeness, I need equity. And if you're really trying to win, you need to bet with me. Until next week, thanks for listening to the quick recap. We'll talk soon. Take care.